Dear students, welcome back. In cost accounting, I was teaching about stores ledger account. In that, I taught you about a last in, first out system and first in, first out system. In that, I have explained you about a concept where the departments will send back the materials to the stores, correct? So here the department will send back the materials to the stores, so that we have understood pricing of returns, correct? So I had a small session where I have explained what is that return to stores and all. But today we are going to understand return to vendors. Suppose the stores have purchased the material from some XYZ vendor, and now the store is not the store don't wanted to keep that material, so stores wanted to send it back to the vendor. So when store decides to send back, so what are the procedure we are supposed to follow to record such kind of transaction under stores ledger account, or under last in first out or first in first out? So that is what we are going to learn in this today's session. So let us look into the explanation part of returns to vendor. See, pricing of returns to stores to the vendor. So try to understand pricing of returns stores to the vendor. So who is sending it back? The store is sending it back. To whom it is sending it back? It's sending it back to the vendor. Okay, so that is how the price should be fixed. That is what we are going to discuss in today's session. So let us understand point number one. If the price of such materials is not charged to issue, if still in stock, see, try to understand this point, it is very important. If the price of such material is not charged to issues, if not at issued, in such a case, if it is still in stock, so it shall be credited in stores ledger account at their purchase price by referring into GRN number. Further adjustment is required. Understood? So there must be an adjustment required for such kind of transaction, and we are going to fix a price by referring to GRN number. So next point number two, where the price of such material is already charged to issue. So price is already, the stock is already issued, clear? So price of such materials which is already issued, but which is not in the stock of the stores, it is not in the stock of the stores, so they are priced at the usual issue price according to the method in use. If the price is different between their price and purchase price, so that will be adjusted through inventory adjustment account. So in a normal case, that is the usual case what we follow, so that where we are exactly going to consider the regular price, that is the issue price only we are going to consider. So that in that issue price only we are going to send it back to the vendor. If there is a difference, suppose say sir issue price is different and vendor's price is different, in such a case what we are going to do, so we will open a inventory adjustment account. So by opening that account we will transfer, we will adjust this kind of difference in prices. Point number three, when materials are returned from production for the purpose of sending back to the supplier, they must be recorded in receipts and issue column at the price at which they would have been issued to production. So at the price which has to be issued to the production, so they must consider that particular price. Okay, so that material it's almost, it is in the production, for the production. So we are taking it back from the production department and sending it back to the supplier. So in such a case, so we are going to issued to production department, so that we are going to consider. Okay, so this is about returns to vendor theoretical part, which you must know, so which you are supposed to understand. So that is returns to stores. So on this adjustment, we are going to solve a problem. Let us start a problem, so that which have a adjustment, the goods return to vendor from the stores, materials return to vendors from the stores. So let us see the problem. Illustration number 10. So open a column, that is the date, particulars, units and unit rate. So on 1/1/2019, opening balance 500 units at rupees 8 each. On 4/1/2019, issued to job A 200 units. So here they have given a title, that is a job A, job B, job C and all. So it is a title. So just you have to write it while issuing or while receiving. Okay. So issued to job A 200 units. On 5/1/2019, received from vendor 200 units at rupees 10 per unit. On 7/1/2019, issued to job B 100 units. So 100 units has been issued to job B, that is on 7/1/2019. On 10/1/2019, received from vendor 300 units at rupees 12. So on 13/1/2019, issued to job C 300 units. See, look at the problem carefully. On 10/1/2019, received from vendor 300 units, and on 13/1/2019, issued to job C is 300 units. On 15/1/2019, received from vendor 400 units. On 16/1/2019, return to vendor 50 units. Underline this point. That is on 16/1/2019, return to vendor 50 units. So purchased, which was purchased on 5th. So he has given in the bracket, that is purchased on January 5th. On 17/1/2019, issued to job D 450 units. So 450 units has been issued to job D, that is on 17/1/2019. On 20/1/2019, received from vendor 500 units at rupees 16 each. So that is on 20/1/2019. On 25/1/2019, issued to job B 100 units. So job B again we have issued, that is on 25/1/2019, 100 units. On 30/1/2019, issued to job D 250 units. So this is the problem. So show the following in stores ledger account under FIFO method. So we have to prepare a stores ledger account under FIFO method. So that is what he has said in the problem. So now, without making any further delay, let us open a stores ledger account under FIFO method, that is first in first out method. So name of the material, there is no any details as such. Code number they have not given. Description of the materials also not given, but maximum level, minimum level, reorder level, you have to enter it whether he gives the information or not. So these are the major headings which you are supposed to enter without fail. So let us open a column for stores ledger account under first in first out method. date. Then we have a receipts. Under receipts, we have a GRN column, we have a quantity column, we have a rate column, we have a amount column. So GRN, quantity, rate and amount. Then open issues column. Under issues, we have MRN column, we have quantity column, we have a rate column and we have a amount column as well. So MRN, quantity, rate and amount. So and at last the balance column will have three sub column, that is quantity, rate and amount. Quantity, rate and amount. Okay. So now this table is ready. Let us start the solution part of this particular problem. On 1/1/2019, so what was the issue? What was the issue on 1/1/2019? So in the question he clearly said there was an opening balance of 500 units at rupees 8. So directly he said there is an opening balance. So obviously there is no receipts, there is no issues. Directly opening balance entry. That means we are going to show a closing stock. So under receipt side, GRN nil, quantity nil, issues nil, that is rate nil and amount nil. Under issue column again MRN nil, quantity nil, rate nil and amount also nil. But in the balance column, so quantity 500 units at rupees 8 each, so amount comes to 40,000 rupees. So amount comes to 4,000 rupees. So amount is 4,000 rupees, that is 500 into 8. Okay, 4,000 rupees. So next on 4/1/2019, so there is a issue entry. So what is that issue is 200 units of material has been issued to job A. So 200 units of material has been issued to job A, correct? So now go to the receipts column, GRN nil, quantity nil, rate nil, amount nil, because this is a issue entry. So then receipts entry will become a nil, that is a dash. So under issue entry, so MRN column, which job we are issuing it to? We are issuing it to job A. So write down that job A. Quantity, at what quantity we are using? We are issuing 200 quantity, 200 units we are issuing. So under quantity column enter 200 at the rate of rupees 8 per unit. So now 200 into 8, that comes to 1,600 rupees. So 200 into 8, that comes to 1,600 rupees. So balance column, go to the balance column. So out of 500 units, so how many have issued? I've issued 200 units. So the balance left out is 300 units at rupees 8 per unit. So the amount comes to 2,400 rupees. So next on 5th January 2019, so there is a receipt entry. There is a receipt entry. So go to the receipt column. So there is no any GRN number given. So GRN dash. Then we have a quantity. So what quantity we have issued? 200 units. So 200 units at rupees 10 rupees. At rupees 10 each we are receiving it. So 200 into 10, 2,000 rupees worth of material we have received. So when there is a receive entry, obviously issue columns will become nil. So go to the issue column. So MRN nil, quantity nil, rate nil and amount nil. Go to the balance column. Copy the balance of 4/1/2019, that is 300 units at rupees 8 per unit, that is 2,400 rupees, and 200 units at rupees 10 per unit, 2,000 rupees. So now we are done with the 5th January entry. So let us move further towards 7th January 2019 entry. So on 7th January, so there is a issue. There is a issue. So receipts column will become a nil. So that is GRN nil, quantity nil, rate nil, and amount also nil. But whereas under issues, so we are issuing it to which department? We are issuing that to job B, correct? We are issuing this material to job B. So under MRN column, write down job B. So what is the quantity we are issuing? 100 units. So under quantity column, write down 100 units. So under rate column, 8 rupees were rate, because we are following first in first out method. So you can check out the balance, that is which is reflected on 5th January. So which is at the toppest mode, that is 300 units at rupees 8. So the first item should be issued. So out of 300, I am issuing 100 units at rupees 8, 800 rupees. So go to the balance column. Out of 300, I have issued 100 units. So deduct that, you are going to get 200 units at rupees 8 per unit, 1600 rupees, and 200 units at rupees 10 per unit, 2000 rupees. So on 10th January 2019, again we have received a stock. When I say received a stock, so you must remember that this entry will be made under receipt side. So what is the quantity we have received? 300 rupees. What is the price per unit? 12 rupees per unit. Okay, so now enter the same details. GRN dash under receipts column. So quantity, what is the quantity we have received? 300 units at rupees 12 each, 3600 rupees. So under issues, MRN nil, quantity nil, rate nil, and amount also nil. Go to the balance column. 200 units at rupees 8 each, 1600 rupees. 200 units at rupees 10 each, 2000 rupees. 200 units at rupees 12 each, 3600 rupees. So there is no any confusion over here. So it is a crystal clear entry which we have made. So next we are moving further. Next, that is on 13th January 2019 entry. So on 13th January 2019, what happened? So there was a issue to the job C. So issued to the job C. So how many units we are supposed to issue? So we are supposed to issue 300 units. We are supposed to issue 300 units. So on the top we have only 200 units. So directly issue that by mentioning job C name in the MRN column. So job C. So what is the issue? So 300 units out of, so previous day we have a flow. On the 10th, whatever the balance we have, the top one 200 directly issued, and next immediately we had a 200 units at rupees 10 each. Out of 100 units has been issued. So the left out balance is out of 200 units 100 has been issued. So the left out balance will be 100 into 10, 1000 rupees, and 300 into 12, 3600 rupees. On 15th January 2019, so GRN nil, there was a receipt entry, that is why GRN nil, but quantity we have received, that is on 15th January. So 400 units we have received. So 400 units at rupees 14 per unit. So 400 into 14, that comes to 5600 rupees. That comes to 5600 rupees. So go to the issues column. So under issues, MRN nil, then quantity nil, rate nil, and amount also nil. So now it is time to calculate the balance figure. So copy the balance of 13th January as it is, that is 100 into 10, 1000 rupees. Then out of the balance whatever left out, that is 300 into 12. So copy that 300 in paste. Then today's issue, that is 400 into 14. So that is 5600. So that is 15th January 2019's receipt. So that we have received 400 units at rupees 14 each. So that comes to 5600 rupees. So next we are moving on to the 16th January 2019. So there is no any receipt entry. So directly GRN nil, quantity nil, rate nil, and amount nil. So go to the MRN column. So this is the entry, return to the vendor when I am sending the goods to my supplier from the stores. So if you are a store manager, you are sending the goods to the producer. So in such a case, so that should be shown under issues, because the stock is out of the production unit, the stock is out of the firm or company or industry, whatever you call. Okay, so that is why return to the vendor. How many units it has been returned? 50 units at rupees 10 each. 50 units at rupees 10 each. So why we have taken 10 rupees price? Because he clearly said which was purchased on January 5th. So you look at the January 5th issue, receipt price is 10 rupees per unit. So at that price only we are sending it back. So 50 into 10, 500 rupees. So go to the balance now. So 50 units at rupees 10, 500 units. Then we have a 300 units at rupees 12, that is 200 units at rupees 12, 3600, and 400 units at rupees 14 each, we have a 5600 rupees. So that means out of 100 units on 15th January, so out of that I have issued 50 units. So that is why I have a balance figure of 50 units, 200 units and 400 units. So why this is happening? Because that has been returned to the vendor, so from the existing stock I am supposed to issue. So next we are further moving on to the 17th January 2019. So there was a issue. So when there is a issue, receipts column, that is GRN nil, quantity nil, rate nil, amount also nil. So go to the issues column, under MRN column write down job D, then go to the what is the number of units we are supposed to issue, that is 450 units. So take first 50 units at rupees 10 each, 500 rupees, 300 units at rupees 12 each, that comes to 3600 rupees, then 100 units at rupees 14, that comes to 1400 rupees. So if all the first three is cleared, so the left out is, out of 400 units I've issued 100 units over here, so the balance is 300 units at rupees 14 rupees per unit. So it is a 300 units at rupees 14 per unit. So that 300 into 14, so that comes to 4200 rupees. So next move on to the 20th January 2019. So there was a receipt. So we are receiving the material from the supplier or so called vendor. Okay, so GRN number nil, but quantity 500 units, each unit cost price is 16 rupees. So 500 into 16, 8000 rupees. So go to the balance column directly, make a entry. The difference is 300 units at rupees 14 each, that comes to 4200 rupees, that comes to 4200 rupees. So next further moving on to the 20th January 2019 entry. So that is under receipts column, GRN number nil, but there was a issue of 500 units. So 500 into 16 rupees, because the topmost 16 rupees, the price which we are receiving the goods on 20th January 2019. So now directly go to the balance column, so that issue column will be nil. So that is MRN number, quantity, rate and amount is a nil. Go to the balance and write down 300 units into 14, that comes to 4200, and 500 units at rupees 16 each, that comes to 8000 rupees, that comes to 8000 rupees. So next is on 25th January 2019. So there was a issue. So receipts all nil, so that is GRN nil, quantity nil, rate nil and amount also nil. So MRN number, job, which job we are issuing? Job B. How many units we are issuing? So that is, how many units we are issuing? For job D, so sorry, for job B, 100 units. So 100 into 14 rupees, so that comes to 1400. So the balance will be 100 units at rupees 14 each, 1400. And on the same day, we have 500 units has been received. So that is 500 into 16 rupees, so that comes to 8000 rupees. So on 30th January 2019, so for job D we are issuing, so when there is a issue entry, obviously your receipts entry will be nil. So under MRN column write down job D, then write down 250 units, so out of which 100 units at rupees 4 each, so that comes to 1400, and 150 units at rupees 18 per unit, sorry, at rupees 16 per unit, so that comes to 800 rupees. So go to the balance column, left out is 450 units at rupees 16 each, so that comes to 7200 rupees, 7200 rupees. So you can have a working note for that. So value of closing stock, that is units, rate and amount. So how many units left out? 450 units left out at rupees 16 each. So the total amount was 72,000. So here I have written a note number 2, so which clearly says the materials returned on 16/1/2019 to the vendor out of the purchase made on 5/1/2019, 5th January 2019 is valued at the original cost price or original rate of purchases of rupees 10 at its still in stock value. Okay, so we are done with this problem, and further we are going to move in the next coming session to the next problem. So until then, copy the problem and try yourself to solve the problem. Take care, see you soon, bye bye.